Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. We saw soybeans surge today on trade hopes, but before we get into that, let's talk about what happened in the markets as a whole. Canola was up 20 cents a ton today at 634 was the last trade. Canola was up quite a bit better during the session, but faded out near the end of the day. Same thing could be said about Minneapolis wheat. We finished a quarter of a cent higher at 559 and a quarter. But the other wheat markets were good. Kansas City wheat up 12 and three quarter to 514 and a quarter. Chicago wheat up 13 and a half to 526. Soybeans, as mentioned, surged almost 25 cents, 24 and three quarter to be exact, ending at 1085. Corn was up five and a half today at 428.75. Bean oil was up half a cent at 50.77. Canadian dollar down marginally. It's at 71.44 at the time of this recording. Cattle took another hit today. Feeders were down 13.75 a hundredweight to 334.42, and fats were down six and three quarter to 227.18. All right, let's talk about soybeans here. As you can see, it hit a new high today, surging past and gapping up here today. Let's take a look at some of the headlines. This was just massively driven by headlines. Soybeans jump on signs of easing U.S.-China trade tensions. We've got Bessant says China to delay rare earths rules by a year and buy U.S. soybeans. Soybeans part of U.S.-China framework deal over the weekend. Potential China deal. New trade pacts brighten U.S. soybean outlook. China could start making substantial purchases of U.S. soybeans, America's biggest agriculture export market. China slows down soybean purchases ahead of Yi Trump summit. I actually think this is an important headline that shows that China may be willing to buy U.S. soybeans almost immediately after a trade framework or trade deal is done. And of course, Bessant says that China will make a substantial purchase of U.S. soybeans and should avoid 100% tariff. So again, all of this kind of culminates into a lot of optimism that we've seen since the middle of October here. Today, that made a new high that is a multi-month high not seen since early June of this year. And it does run up into the area that traded prior to Trump taking office. So we're not above the price before Trump took office, but we're basically right back up there. So that is at least a good sign. Trump gets the royal Japan treatment. China trade truce hopes rise. All good news by and large. I do think that there is a risk here that if the trade talks don't go quite as planned, that the market may have now overbought the soybean position, and there could be some volatility if something comes out of the trade talks that maybe looks less favorable than what the market is pricing in. As you can see by all those headlines that we shared, the market is looking at this as a very positive, a positive reaction, and they're expecting big things to come out of this week. So if there's disappointment in any way, that could put some risk into this. Not that I'm not saying that that's what's going to happen. I'm just saying that those are the risks. Let's look at some of the other markets today. Soybean meal also rallied back up to previous highs, the August highs. China when they crush the beans themselves, they largely do it for the meal, for animal feed. We do, or the U.S. does export some meal to China as well. So there's definitely been a rise in the meal value. But we didn't see this necessarily translate into the rest of the oilseed complex. So here in Canada, what we find, Western Canada particularly, what we find important is the price of canola. What's interesting here is that we did see canola kind of trade up to the 50-day moving average. It traded briefly above that today, but we actually ended off, and I'll show this to you here. We talked about 20 cents of gains, but the candle today actually produced a loss. And how that works is the change was 20 cents higher, but you can see here the candle shows a loss. The reason that is because we still saw 20-cent gains over the previous close, but it did open higher and then faded out as the day went on. So that's why we see a negative candle in this chart, for example. So canola, by and large, basically did nothing today. It did rally early in the session, like even in the overnights before the day session opened, on the same news that soybeans are, and but faded out. So we didn't see the same gains in canola as we did in soybeans. Some may be wondering why that is. Here's one clue. I'll give you a couple others here. This is December bean oil. We did not see a substantial rally in that today. In fact, it's still been relatively anemic or sideways or whatever you want to call it. It's clustered very close here to the 20-day moving average, which is a pretty good sign of a neutral market, at least at this point. But there's some Canadian fundamentals that are playing into this as well. Deliveries are strong. They're not necessarily unseasonably strong, but we continue to see canola deliveries about at, the normal levels. The blue dash lines here are last year. So we're tracking very close to last year as far as canola deliveries by farmers into the either the elevator system or the process system. We do see high stocks in the primary and process elevators as well. This is primary and process combined. Primary elevators would be the elevators that you deliver to in the country. Process elevators are crush plants, etc. So the stocks are relatively high. The deliveries are still coming in. So we're seeing still some weakness in the canola market as a result. And then add to that the dismal exports. So the canola that is getting delivered into the primary elevators is not getting exported at the same pace. So we are building some stocks in there, and or the elevators are trying to incentivize lower delivery by fading the basis, by not giving good cash prices, and we're seeing that reflected as well in the futures market. We did see a big dip this last week in crush. We last week we crushed 252,400 tons, or a little bit over that. That was a record large amount. The week following here, now the week that ended, I think the 19th is what they categorize that at, is 231,000. So we saw a big dip in the canola crush, and we saw that also in the capacity utilization. So we went from 93.3% capacity utilization last week to 85.5%, or the week previous to 85.5 this week. So we've seen a contraction in the crush market, and I think all of those things combined kind of keep canola along the ropes, at least for the time being. We did see corn rally. There was some carryover into the other markets from the soybean news as well, which is good. We saw December corn rally and briefly made a high above this kind of resistance level here. Didn't manage to close above that high. So it still is a little bit weary as to whether that's going to continue to rally or not. But we did see some follow through on the wheat markets over the last couple of days. We talked in one of our videos about wheat rallying into the end of last week. We have seen some carryover now. We have now seen it trade well above the 50-day moving average. We've seen it cleanly break out of that channel. These are all good signs. It's tough, as I think I said in the last video, to kind of pinpoint where those resistance levels are going to come in because of the very tight trading channel that this has been down. So I think, moving averages right now are a good, clear indication. We won't see any moving average crosses for the next little while, meaning like the 20-day crossing the 50-day. But we could see this trade kind of come up to each of these resistance levels. That's HRW. Here is CBOT. Very similar pattern. We broke above the 50-day today. We closed clearly above the 50-day. The 100-day is the next target, and then after that, the 200-day would be some technical potential pivot points, or at least some resistance in the marketplace. Spring wheat did not participate to the same degree, and again, that's kind of disappointing for us as Canadian or Western Canadian farmers. We did test that 50-day, but failed to close above it. We also failed to close above the minor trend line resistance as well. So spring wheat, for some of the same reasons as canola, as far as the Canadian harvest and the availability in Canada, is a problem. Although we are seeing excellent wheat exports. I didn't put the charts in here today, but we are seeing like cumulative wheat exports are beating last year, which already was an amazing year. So it's going to be a good year for wheat exports, likely because there isn't much canola exports, and the primary elevators are wanting to do something. They got to turn the wheels. So that's what's happening. Not to end this video on a low note, but we are seeing some follow through as well. We talked a few weeks ago about The potential top here in cattle, and then Trump's comments solidified the downward spiral in the cattle markets. This is the feeder cattle market, gapped lower today, even traded below the previous low that we saw in early September, tested the 50-day moving average here. So not looking good in the feeder cattle market. The fats were, a little bit better, or they haven't seen the same level of declines as the feeder cattle, but they did break well below those early September lows, as well as trade down to the and below the 50-day moving average. If you haven't subscribed to our premium content, we give our premium subscribers all of the analysis and information and our biases and our all that kind of stuff. We do that by providing morning commentary analysis. We do weekly in-depth reports, and then we do timely, actionable information in the form of ad hoc reports and these videos and things like that. So these videos are then sent directly to your inbox. So if you want to subscribe, go to canadianagmarkets.com/subscribe to do that. And it's only 99 bucks a month. You can cancel anytime. You can also subscribe to this YouTube channel. It does us a favor by increasing our numbers and gets us shown to more people. So thank you very much for those who have subscribed. We've had a big bump in subscribers over the last week or so. So thank you for that. But that is all we have for you today. Thank you for joining us. We will see you again tomorrow. Have a great day.